When taking a look at market size and liquidity, the key point here is that there is no physical market or central exchange. If you look at how stock exchange works, it's very central. You have other people inside there or people connecting via the internet, but it is still a central exchange point, which means that they're traditionally stuck to the hours that they're trading. That is not the case in the Forex market. 3,500 to 4,000 world banks are all interconnected. Through various channels, they're all trading between each other and not just people trading Forex for profit. The bulk of exchanges are from imports and exports. Through all these different types of channels, there are constantly trades taking place between large international banks and even all the smaller private banks. You are unwittingly connected to thousands of exchange points. This gives us the benefit of not having set trading hours. Forex can typically be traded 24 hours a day, but 5 days a week. And there's only 2 public holidays a year, Christmas Day and New Year's Day, that the Forex market is closed. Because the only connection that we as retail traders need is to our broker, we can effectively trade from anywhere, as long as we have reliable internet. So you could quite literally be sitting with a laptop on the beach and trading Forex. If you add up the total turnover of the top stock exchanges, they trade on average $300 billion a day. That is a fair average. Some days are higher, some days are less, but still, $300 billion on average is traded through the top stock exchanges every single day. Now, that is a lot of money that's going through. And even with 300 billion, we find that there are certain times when people can work on price fixing, where they can start forcing stocks to move up or down. The Forex market trades approximately $4 trillion a day. That's about 13 times the size of the top stock exchanges. So all of a sudden, $300 billion seems very, very small. Out of the 4 trillion traded each day, 1.4 trillion is retail Forex traders. The US dollar makes up nearly 85% of all of those trades, so it is by far the biggest player in the market. This chart is just to drive home how much the US dollar dominates the market. We can quickly see that the most traded currency pair would obviously be the euro dollar. Please note that this might not always be the case for every hour of every day. This is an average over time. Speculation means that we are guessing. It's not a nice phrase to hear. Guesstimate is probably a little bit better. The way that I see it is that we basically start off with a 50-50 chance of guessing the right direction when the markets are moving. Then, as we start applying knowledge, we start shifting the chances of winning the trade into our favor. Adding indicators, trading in the direction of the market, looking at news events, and also how to correctly place stop losses and take profits all increases our chance of being successful. But please keep in mind that there is no such thing as a sure thing. High liquidity means that there is always someone buying and selling. There is always someone willing to buy what you are selling, which is something that a lot of stock traders wish they had. Even if you had made a huge profit off a trade and it's time to close, thousands of other traders are also trying to get out of the trade. But because we are trading in the same space as the trillions of US dollars that are dealing with imports and exports, we can close our deal. It is rare for a trade to take longer than a few seconds to close. Since we have no central exchange point, we have more hours. We're a lot more flexible with the times that we can trade. However, we do find that there are some times which are a lot busier than others. And remember, we want movements in the markets. If it's going sideways, the only thing we can do is lose money. We want it to be going up or down because then that's where we can make the money. We also find that when more people are trading, we typically have lower spreads because there's more supply, there's more movement, there's more volume in the market. And this can be crucial for people who are scalping. Longer term strategies, it's not such a big issue because the trades are typically a lot larger. So if you're spending 5 pips or 10 pips on a trade, it doesn't really make a difference because you're targeting the 100 to the 200 pips trades. Alright, so we know that we have no central exchange, so you can trade at any time you want during the week. However, we also want to trade when the markets are moving. In Forex, we can make money when the market's moving up or down, but not when it's going sideways. We've found that the general trading hours for these big 4 areas gives us a lot of insight into how much we can expect the market to move. The biggest of these sessions is the London session. You'll also see that we have crossover times, when 2 of the major centers are both open. Take note of the London-New York session. I prefer to already be in a trade before this happens, as we find that London often picks up a direction in the mornings, and it sets a new trend in the market. And then sometimes when New York wakes up, it has a look and it says, oh, well, this is the direction. They all jump in and they keep pushing it. So if you're already in a profitable trade in the right direction, then sometimes New York just drives it home for you. We've switched over here to where the northern hemisphere is in their winter, and you'll see that the same thing applies. We do still have our crossover times. However, just keep in mind things like daylight savings, which can shift things around a little bit. Just to drive home the point of how busy the London session is, and keep in mind that we want movement. We don't want sideways, we want movement. I've taken the top 3 trading sessions with the largest currency pairs. Values shown are average pip movements. Some days are a little more, some days are a little less. This is an average of how much movement we can expect. Take notes of the trading sessions. You'll see that London is by far the largest, despite the US dollar being the biggest currency traded. I always assumed that New York would be the largest session, but after looking at this kind of data, we see quite clearly that London is actually the busiest session to be trading. If you have a look down the board, you'll see that, say the euro dollar, on average from the open to close of the London session, it shifts 114 pips. That means that it closes 114 pips higher or lower than where it started at the beginning of the session. This is true all the way down. Almost any of the currency pairs, it is best to trade during the London session. But don't worry, that doesn't mean that you have to be trading during the day. There are still quite a few traders who are trading part-time while they're working and they're doing it in the evenings. It is just honestly a little bit more difficult. The positive thing about that is that if you are showing profit but only trading in the evenings, let's say you have a day job and you're learning how to trade and you're doing this at night, say 2 or 3 hours every now and then, if you're showing profit at night, then you are going to absolutely murder it when you can trade during the day. We can trade during the smaller times, but just remember, we can make money if the markets are going up or down, but not when it's going sideways. So we want to pick pairs during the busy sessions, where there is a lot of movement, but find what works for you.